In this video, we're going to talk about the changing face of buy-to-let mortgages. Buy-to-let mortgages lending benefited by what appeared to be a persistent period of growth in the UK. In 2007, 44.6 billion of buy-to-let mortgages were advanced, which represented more than 12% of all mortgages. Today we are starting at a somewhat different picture. Buy-to-let mortgages was a mere 8.5 billion in 2009, which represented less than 6% of total mortgages. Buy-to-let mortgages were significantly more negatively affected by the lack of liquidity in the market than prime, as lenders tightened their criteria. This is a trend that is likely to continue for some time as banks and building societies need to rebuild their balance sheet. Despite the downturn in the buy-to-let mortgages market, borrowers have fared better in arrears than prime borrowers. No doubt, buy-to-let mortgage borrowers have enjoyed historical low rates. Of course, we all know that this is not going to continue, and as soon as rates start to rise, many buy-to-let mortgage borrowers will find that yields do not move in line with interest rates, and they will be sitting on a great payment shock. However, this should not be seen as a great disaster waiting to happen. It should be seen as an opportunity for brokers to review their clients' needs, to give them options which may be available, and start to plan how best to tackle a potential rate rise. Also, lenders with buy-to-let mortgages on their books need to assess what risks they may face and put proactive strategies in place to deal with this scenario. Politically, the private rented sector is important as statistics from the Department of Communities and local government show that over the next 20 years, the trend for the formation of smaller households increasing significantly. Today, the average household has 2 to 3 people, but by 2030 this decreases to around 1 or 2 people. Therefore, if the population does not grow, we will need more housing, and as a result, demand for privately rented property will remain high. I believe that the buy-to-let mortgage market must be regulated for the following reasons. Buy-to-let mortgages are a long-term investment, yet anyone can advise on buy-to-let mortgages. This cannot be right. If buy-to-let mortgages remain unregulated, this may attract rogue selling, get-rich-quick schemes. Some people would have you believe that buy-to-let mortgage regulation is just too difficult to achieve, and therefore it should not happen. However, in my view, that regulation is tantamount to turning a blind eye, and that is something we should not allow. If you require any mortgage advice, please visit www.mortgagesolutions1.co.uk. That's www.mortgagesolutions1.co.uk.